Hello and welcome everyone to Oil Asset of the Day for the 21st of July 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, on Tuesday right now, oil is up 3% on the day. It's broken back out to $42 per barrel, which was the key level where oil prices broke down from at the beginning of the price wars here that we saw back in March, where you'll remember oil prices gapped off the open $10 from $42 per barrel down towards that $30 per barrel level. Since then, we have come all the way back up over the last few months. We've filled the gap, and now we're again at a bit of a decision point where we've got resistance at 42, support at 39. Now, there are some key news items that I would be aware of over the course of this week. So we do, of course, have the API data, which is coming out later in the session on Tuesday, and crude oil inventories data, which is coming out on Wednesday. Now, we have seen, of course, an increase in the overall number of infections of COVID-19 in the United States lately. However, we've continued to see stimulus come in from the Federal Reserve, which is supporting not only the stock market, but also energy markets as well. Of course, you're seeing that have a knock-on effect with gold, silver, platinum, which are all up significantly at the moment. Gold prices, as I've covered in Gold Asset of the Day, is broken out to 9-year highs. Silver's currently just tapped 7-year highs, and platinum has had a 650-point move in just 2 days. Oil prices are catching a bid though. I would look at this $42 per barrel level very closely. If we can break and close above that level, it opens up the door to $45 per barrel, not in one breakout, but as we transition between now and the end of the month. That would be really the next key magnetic level there for oil. Now, so far, the greatest way to trade oil has been to benefit from the ranges. So effectively, you want to be buying in at $38, $39 per barrel, taking profit around that $41, $42 per barrel handle. Oil has been ricocheting in a very tight range recently. We've also benefited from natural gas. We in fact banked just earlier on today 55 points on a trade where we bought back in towards the 1.6 level on nat gas, which has broken down towards 1 month lows. There's a good seasonal play on natural gas. Typically at this time of year, as you get towards the end of July into August, natural gas prices recently broke down as low as 25-year lows. That also offers a fantastic risk reward, especially as hedge funds and money managers continue to build their overall net long position in natural gas. Now, coming back to crude oil, hedge funds have in fact trimmed their net longs ever so slightly, not by a huge amount. They're overall neutral on this market right now, but it does show you some indecision and some waiting and see. So traders, they want to see, is oil going to be able to break above $42 per barrel, make a move up to 45, or is it a failed rally? Are we going to see the move run out of steam again in a rotation back towards $38, $39 per barrel? So again, I perceive the best way to trade this, just take advantage of the ricocheting of price action between 42 down to $38, $39 per barrel until we can get a significant breakout. We have re-established a position in natural gas, which we are long on right now, which is also in profit. Trade is protected. We banked some partial profits earlier on today on that. I would also watch that market too. Another major news item, which can be a big catalyst, of course, for the precious metals, but also for energies, is next week's FOMC statement at 7 o'clock London time. So have that on the radar. That can also be a big mover for the US dollar. And of course, oil priced in US dollars. If you see a breakout to the upside in the dollar, that can have pressure on oil. But if you see the US dollar continue momentum lower, that can provide further support to oil. So with that, that's been Oil Asset of the Day. And of course, we wish you good trading.